One of the initiatives you led probably 3 years ago was, I think you called it How We Work. Tell me a bit more about what was it about? Like, what was the trigger for that initiative? What were the pain points that you were trying to solve?
So Vince came up with How We Work about the end of 2023. And I think what we realized was, as we were looking to grow our North American operation, as I mentioned, standing up new products, areas where we were subscale, we needed to do that very, very quickly and very, very consistently and in a scaled fashion. Similarly, we're also starting to see in the international space, Lloyd's space, a lot of facilitization of business, distribution changing, more MGAs, more delegated business. And so it became very quickly that one size fits all approach to the operating model would not be sustainable as the market evolved. And in particular now, as the market is transitioning to a bit of a softer marketplace. So this company grew up, early 2000s, grew up in a hard market, insurance and reinsurance a number of years ago, quite siloed. It grew quickly. Everybody created their own everything, our own ways of working and their own, platforms, spreadsheets, et cetera. And so, we realized that the way to take the company to the next level and truly scale and drive that shareholder value was to reduce the fragmentation, to operate more as an integrated team, to bring together these functions that had operated in quite sort of separate and disparate ways with single-threaded accountability. So that was really the impetus and the driver. I ran How We Work as part of my role as also CEO of RE, but it became quite obvious quite quickly that this was a full-time job and that the only way to truly be able to reimagine the operating model across these vast changes that only continued to come was to create this role.
When you took the keys of Insurer and the turnaround, what were the pillars of the investment thesis? When did you think you're going to outcompete much larger insurers in the market?
I guess the first one was culture. So, Insurer was a 20-year-old company when I joined it, originally being very, very innovative. It had been in the vanguard of companies that had moved from broking to telephony. So it was like Direct Line at the time. It was a pioneer in terms of telephony-based insurance. And it was also in the vanguard of companies that had gone into price comparison websites. So it had an innovative heritage, but I think it had been pretty underinvested in for the period immediately before I joined the company for many reasons. It hadn't properly adapted to digital, and culturally it was really, really quite introverted. It was very proud, very introverted, and quite slow moving. And I guess I had a sense of trying to create a company that was humble, but humble from a perspective of looking out at the world with a big, big ambitions. We did a lot of work initially on culture and also on mission and purpose. We set a purpose for the company of fixing insurance for good, a sense that we needed to do something that was not just about making money. We had a transformational zeal to make the process of insurance better for customers. We felt there were a lot of slow-moving competitors with monolithic, complex legacy technology stacks. And if we could create something that was faster moving, that would be a way that we could outcompete. So we really set ourselves the mission of becoming the preeminent digital insurer in the UK.
Two follow-up questions, one on the technology stack and one on the Agile point you just mentioned. So when you were thinking about the technology stack and making that brave decisions, right, even if they were the right ones, then you were not following the herd in those decisions. What was driving those architectural choices? Were you trying to drive automation and lower costs? Were you trying to drive better insights and data analytics for pricing, or a combination of both?
You've touched on certainly a couple of the reasons. I'd grown up in large, complex companies with large amounts of legacy, and I thought there was a real benefit in being able to have all your data in one place, dynamically updated on a real-time basis. I'd never managed to achieve that because the complexity of the legacy and the complexity of the business that I'd previously been in just didn't allow it. And we felt that if you could do that, you would just have huge insights in terms of how you price business, how you create propositions, how you tweak customer journeys, how you make decisions in claims. So that sense of having a really integrated, dynamic data set we felt was really important. The second thing was that we were and some of this comes from, my days with Cytora, working with fintech. We're conscious that there's huge dynamism in terms of the kind of fintech type offerings. We sense that would continue to innovate. So we wanted to have a technology stack where you could plug and play different components.
I think you declared a really interesting ambition, right? Which is you want Markel to be the preeminent specialty insurance company on the planet, I think nobody would argue that should be your vision, and Markel is perfectly placed to become that. But what does it mean? How will you know whether you're coming closer to that goal?
I'm lucky enough to have been brought across here by our CEO, Simon Wilson, whose vision this is to be this preeminent specialty insurer on the planet. And he's already he's defined what that is to all of us. And he talks about 4 things when we're trying to build that. And we are not there yet in being the preeminent specialty insurer on the planet. We are building it right now. And 4 things he talks about is, 1, we must obsess over our customers. Insurance has this incredibly convoluted value chain where sometimes you sit quite far removed from your customer. The best specialty insurer will absolutely think about the person buying the policy and the person we are helping out when things go wrong. I think it's so often we forget the brilliant role insurance plays in society. Our economic role is to help people out when things go wrong. So when you're building the preeminent specialty insurer on the planet, you've got to obsess over those customers and remember that they're the ones who pay you for that promise to help them out when things go wrong. So really having that obsession around the customer is important.
And you would argue that this is, you would argue this is important in any industry, but I think specialty insurance, where you are dealing with really specific and complex risks, it's even more important, right, than in any other business.
Yeah, I think that is the most important thing a business is going to think about is their customer. And that actually linked to that is the second point, really, is around the best expertise. So really making sure that in these specialty classes, you've got the best minds thinking about how to underwrite it and thinking about how to handle the claims. The third thing that Simon's talked about, which I think is kind of the most exciting right now, is speed being critical. And it's exciting right now just because of what these new technological changes going on across the world right now are allowing us to do. We are able to move quicker, not only in the way we transact our business, but also in the way we develop those solutions. But speed of answer, whether it's to a broker bringing us a submission and they want to quote quickly, or it's a customer needing a claim get paid, we pay it quickly. That's the best kind of answer. And so to be the preeminent player, you have to have speed at the forefront of your service offering.
So obviously deep diving on the first one, on the real case studies of how AI is actually driving value. Yeah. Have you been able to answer this question? What have you heard in the last couple of days around what are the ingredients of actually driving value at pace? What's the right way of approaching an AI transformation?
Yeah. So I think that the most interesting one that I saw was the one that was announced yesterday with Travelers and OpenAI. Right now, they have been able to take 90% of all of their first notification of loss calls done for auto claims and use an AI voice agent developed in partnership with OpenAI. And they picked auto claims specifically because it's a high volume. Travelers deal with 1.5 million claims a year. And so there's a lot of data and volume to go at there. So that was the reason why they picked that. And then they've worked very much integrated with the business, getting the business leaders involved in this process. That is a case study where I thought that was interesting to see how they've been able to at scale now. And they started out in 8 states, and then they've now, after just a couple of months of testing, they was able to roll it out nationwide.
And ultimately, all these initiatives require change management, right? Require the the claims adjusters, the claims teams to feel comfortable with the recommendations from those kind of AI-driven decisioning. And the involvement of the business is not just to best define the operating model, but also like to feel comfortable with how it's working, right?
Yeah, and then I think there's the two other things which came up when one of my conversations with another tech company on stage here was the notion of the person I was speaking with had a background from Facebook, and she started off saying, well, Facebook was very famous for move fast and break things, and many people don't know this actually, but they actually changed that statement to move fast on stable infrastructure or so, but not breaking things anymore. The sexy thing in the industry is just let's go quickly, let's move fast. But when you look at the big projects that gets done, it's actually a bit the opposite. It is, you spend more time upfront thinking about, okay, what is it that we need to get done here? Who are the people we need to have in the room? What is the data we need? So you're actually thinking slowly, and then you have a much more rapid execution because you've just gone through and mitigated for all of the things that you really don't want to come up once you're sitting and deploying, and then that's really holding you back.
Most players today are thinking about like, okay, how do they prepare their workflows, technical architecture for that future you are describing, right? And I think one thing I see is, I think that there's a risk that in this world of AI, we are still building workflows that are human first, right? So how do you advise your clients in thinking, okay, well, most likely for the next months or whatever period of time, you still, as you get more comfortable, you still want an underwriter to sniff test or to look at every risk, but over time, the trend, you cannot negate. It's going to increase the automation. So how do you think about how they should be thinking about at a very high level, that's their thinking in the architecture?
Well, there's the business architecture and then there's the technology architecture. So fundamentally, AI will over time shift the way that people think about technology architecture. At the moment, technology architecture is predominantly structured around processes and around human-led processes, fundamentally. Actually, if you look at genuine kind of pure end-to-end automation within kind of services-based businesses rather than product-based businesses, a lot of it is about decision-making. And what generative AI can do is help make decisions. It's not just about automation. It's not just about taking a boring process and doing it quickly and with a computer and ideally more accurately. It can make decisions. It can make choices. Again, are we there today in a way that you would just let go without thinking about it? No. Are we getting there rapidly? Yes. So one thing is around the technology architecture is actually the technology architectures will shift to being process aligned, to being decision and capability aligned much more so. And that is a very different architecture from today. And I'm very conscious that people they're not even starting in today's world, they're starting 2 generations back, mostly. So not only do we help people look at where the future is, but go, okay, but where are you today and how did you get there?
Right. You mentioned that there were 2 use cases that I stopped you, interrupted you several times on the first one. What was the other one you had in mind?
I think this one is particularly fascinating because one of the things that we've seen in the market is that the method of fulfilling a request, so let's say a new business submission, is tightly tied to the channel. So, for example, email is associated with human underwriting. Straight-through processing is associated with completely automated digital rating. And I think one of the big unlocks here will be the decoupling of channel to the method of fulfillment. So, for example, with agentic AI, what you can do is you can actually assess, irrespective of the channel that the risk came in, the most appropriate path for it to flow down. So even if it comes on the email channel, you're able to assess, is this digitally tradable? You're able to assess the data points required for that digital trading route. And then you're able to extract that data from the unstructured documents and fulfill the requirement there. Similarly, actually, one of the main challenges with straight-through processing is, well, there's actually 2 main ones with STP, which is often spoken about. One is like a one-shot process. So there's a set of data points that you need, and if you have the data, you can get a quote, and if you don't have the data, you can't get a quote. So imagine a situation whereby that back and forth that we spoke about earlier could actually be enabled for the STP channel. So Juan sent something in on email and there's one data point which is missing, which is critical. Instead of saying, computer says, no, we can't give you a quote, Juan, what we could do is we could say, Juan, just give us this one data point and we'll get you a quote. And because we have this state or memory, we can actually update the risk object and get the quote for you.
So if we think 5 years out, let's it's 2026 now, we think let's say by 2030, what will the kind of standard workflow in underwriting look like?
Yeah. So I'm not sure if this is a disappointing or exciting answer, but a lot of what we're talking about, the potential of AI, should be realized by then. And what I mean by that is an underwriter's day-to-day should look fundamentally very different than how most commercial underwriters are spending their time today. So what does that mean? They are no longer receiving an email for a submission and having to review it before sending it off for kind of centralized processing and intake. Instead, they're going to just be receiving an output from the workflow up front of the underwriter, where it is a fully assembled submission. It has been enriched with data that was supplementary to the actual submission received, and even a recommended action for the underwriter to consider or next steps to take should be clearly outlined and visible for the underwriter. So the underwriter is fundamentally shifting from data assembly and retyping of data into really thinking purely about pricing nuances, exceptions, and then broker relationship management outside of the transaction itself.
So one final question to wrap it up, Nick. Obviously, there will be a number of people listening to this episode who have set up or are setting up a broker. They're thinking about a potential exit in the next year, 2, 5, whatever, to a private equity firm. What advice would you give them now? Or almost like, what are the things you're going to look for when considering the deal?
Yeah, I think it goes back, Juan, to a couple of the fundamental tenets. Defend your book. That's the demonstration that you're adding value. So really double down on account retention. And at the same time, I think what's important if I were running an agency today is to identify 1 or 2 or 3 areas on the servicing side where AI over time will have a meaningful impact in my cost structure. And so not necessarily to drive down the cost today or tomorrow, but to have the flexibility to adapt to an environment where the revenue profile of a broker might come under some pressure. So those are the 2 things that I think I would focus on if I were running an agency and I wanted to be resilient and I wanted to demonstrate that I'm forward leaning.